Hello and welcome to another IPO Edge Fireside Chat. I'm your host, Jarrett Banks, editor-at-large at IPO Edge, joined by my colleague, Alexandra Lane, multimedia editor here at IPO Edge. We've got an exciting event for you today, a fireside chat with the co-founder and CEO of HotelPlanner, which is a travel technology company based out of Singapore, going public via SPAC, and that SPAC is called Astrea Acquisition Corp, and that's on the Nasdaq at ASAX. Now, before we bring on Tim Hentschel, the CEO and co-founder, just a bit of housekeeping. The great thing about these events is that you, the audience, can ask questions directly to the CEOs. And you can do that by submitting them through the Zoom portal or by emailing editor@ipo-edge.com. And again, if you cannot watch the entire broadcast, a replay will be available at ipo-edge.com about an hour after the event. And so with that, I'd like to bring on our esteemed guest all the way from Singapore, Tim Hentschel. Tim, how are you doing?
I'm great. Thanks for having me, Jarrett. And thanks, Alexandra.
Great. So let's get right into it. We like to ask this of all our guests, why a SPAC and why now?
And why not? It's a great market right now. And, our dream was always to go public. Actually, one of the reasons that I'm out here in Singapore is we were looking at the Australian Stock Exchange on a traditional IPO. When the SPAC market, started to look very appealing to us, and our bankers, that we consulted said that it's a cheaper and a faster way to get public. And, obviously being on the largest tech stock exchange in the world was very appealing. So we pivoted from the Australian Stock Exchange and went 100% towards a SPAC on a three-way merger on the Nasdaq. And we started that process around August of 2020.
Great. And how did that relationship begin with Astrea?
So we didn't actually start talking to Astrea until January of 2021. We first started talking to a company that was a partner with us called reservations.com, who approached us and said that they had heard we were looking to go public and was wondering if we would be interested in partnering up for that. So their founder, Yatin Patel, and I, have been long friends because we've both been in the travel tech business for decades. And so, of course, we said, it does sound very interesting. And then we reached out to Perella Weinberg and Stephen Green and Jim Buckley out of Silicon Valley were our two bankers on that. And then they started to help us put some numbers together as a combined company. And then from there, we started talking to several SPACs, and Astrea stood out as one of the best SPACs because they had prior SPAC experience of successfully taking a company public. They took BurgerFi public in 2020, and the stock price went up, and up. And so when we started to look at what valuations were coming in, we actually went with Astrea because they had the lowest valuation. I know that's going to sound really different from what you typically hear, but their valuation was 200 million, 300 million less than what other SPACs were putting on us. We knew the SPAC market was quite hot, and we knew that a lot of these SPACs didn't have experience of actually taking a company public and then having their stock go from $10 to $15 to $20, but Astrea did. So we went with experience and decided that that was the right SPAC to go with because their valuation was probably the most qualified because they had that prior experience.
Great. Now, before we get into the nitty gritty of the company, could you give us that 10,000 foot view of exactly what HotelPlanner does and the travel tech industry?
Yeah, so we specialize in high touch with high automation. When we started over a decade ago, was with the vision to bring group hotel booking online. Nobody was doing it at the time because it's a hard nut to crack. If you think about HotelPlanner, our name comes from the derivative of event planner, wedding planner, meeting planner, but at hotels, so it's HotelPlanner. And when you were going to plan your wedding, it's a big event, right? A once in a lifetime event. And so you're not necessarily going to think, oh, I'm going to go on the internet and I'm going to DIY this. Unless you believe that you can come up with a company that can deliver on a service promise and exceed that. And that's where we come in. The tough thing is other competitors have come in our market and come and gone. They haven't been able to crack the automation side because we have the most brilliant engineers. And I say that not anecdotally, but literally, because my business partner, John Prince, graduated top of his class from Northeastern in computer science and was working for IBM as a software engineer before he started HotelPlanner with me. So he, has put in the tech in place where we can automate it enough so that we can give high service and still grow profitably. And we're a bootstrap company that has grown the company revenues profitably year over year our entire existence. And that's why it's unique that we teamed up in a three-way merger with reservations.com, whose co-founder profile is very similar to us. Yadin Patel is an entrepreneur like myself, serial entrepreneur. He started and sold several e-commerce companies before he started reservations.com. And his co-founder, Mahesh Chadha, is an engineer, a software engineer by trade, as well as John Prince. So ironically enough, they also were bootstrapped. So when we put the two companies together and we go public, our four founders will own 70% of the stock. And that's very unique these days. No series A, B, C, D, or rounds of funding for us. We went straight to the public market because we were successful enough to grow profitably as bootstrapped entrepreneurs. And it's something that I really want to encourage other entrepreneurs to do that. And one of the reasons, another motivation for going public, is to lead by example and say, hey, if we did it, you can do it too, as an alternative to taking a lot of VC and PE money. And then as an entrepreneur, by the time you get public, you have less than a 4%, 5% interest in the company. And how can the company really share your vision if you're not invested in it at a high level? And that's why I think we're unique on that. We just are always looking to innovate in a way that we can give the most value to our customers and shareholders, because being extremely invested on a personal level means that we're all in on this 24/7. So it's really a reflection of us in every way. I think that makes us unique.
That's actually fantastic advice. From one bootstrapping entrepreneur to another. I really appreciate your thinking there. I'm going to bring in my colleague Alexandra, and I'll be back in a little bit later in the broadcast. Alexandra, take it away.
Yes, thanks, Jarrett, and happy to have you. It's so great to have you here, Tim. You are technically a third generation hotelier. Tell us how this uniquely gives you an advantage in your position as CEO of HotelPlanner.
Yes, and it definitely is an advantage. When I think hotelier, I think of hospitality, and hospitality people have a certain mentality. They take joy out of seeing other people, have a great time. It's you could never get in the 24/7 job of running or owning a hotel if it wasn't more than just the money. It's the ability to look at people having a great time and think, wow, I did help that happen, and that brings joy to you. And so, with the dichotomy of the co-founding, and I say high touch, high automation, John's engineering background brings the high automation. I believe my hospitality background brings the high touch. And so this is what allows us to crack the really hard problems in travel tech, so that we know, if we could just give a little bit extra service, can we do that? Can we change this? And, like when you look at our hotel results, because we book, tons of individual group bookings and individual bookings at group, very good group rates. We give more results than anybody else does, more different options than anybody else, because we want to have it customized to each traveler. We're also using AI from our marketing side on the search engine marketing to bring in, to know a lot about the customer when they get to the site, and then AI to customize the results. And then that translates into, we built the first gig economy reservation system. That means we have 3,000 and growing remote agents out there that help us answer phones to make reservations for our customers. These are all gig economy employees. And that allows us to have localized service. And that AI also works in that, so that when we transfer that call through a VoIP system, that agent is able to give the highest level of service, because they know that person is calling for information about a city that they either live in or have prior experience or information about. So it's about going to that next level of service, but that high automation, makes it profitable for us to do that.
Yeah, it's a really good kind of launch off from, I guess, suppose where the hotel industry has been. And kind of speaking from a high level view, what sort of KPIs have made the hotel industry profitable in the past? And then I'll kind of ask you about what your forecast is moving forward. But let's kind of maybe overview what KPIs have been profitable in the past.
Well, mainly in 2019, we hit the highest ADR, average daily rate, the industry has ever seen, with record revenues. And we're quickly heading back to that. Next couple of years, the global travel industry is supposed to hit a $1.2 trillion spend. And I just flew from Singapore to Miami, connected through Heathrow. My flights were either full or over 90% occupancy on the flights. When I was in Miami and Heathrow, the airports were packed. I mean, shoulder to shoulder for people. So the demand is out there, pent-up demand's there. People have disposable income from all the savings over the lockdowns, and they're ready to spend. And I can attest for that. And we see it in our numbers every day. And I've seen it with my own eyes. So, that's the KPI that's driving these huge tailwinds of growth right now.
Yeah. And then how does HotelPlanner differentiate itself from other hotel and travel booking comps in the space?
Well, like I said, we're always inventing, first in our industry. We were the first to be able to book a group online. We started with an ERP process with HotelPlanner 1.0, then HotelPlanner 2.0, 3.0. We went from online negotiations to e-contracting. Then in HotelPlanner 4.0, we revolutionized again into the first instant group booking. So basically, you put in a search, get an instant group booking rate, easily send that out to all your guests, and they can just book in with their credit card and reserve within your group block and get an instant confirmation. And now we're doing another industry first with a gig economy travel agent reservation platform, a gig economy. I mean, that means not only do you get the tailwinds of the travel industry recovery, and investing in us gets you the growth of the gig economy, which is supposed to do over 5 billion this year and growing. And this job is better than any other job out there. I mean, you're not taking strangers in your car. You're not letting strangers in your house. You're basically just putting on a headset and sitting in your living room, in your jammies if you want, because there's no video call. And you're just talking about your, people who want to ask you questions about your local city or cities you've been to. That's pretty amazing that we have that kind of opportunity, because the customer service is better with that KPI. The conversion is better for the call, from a call to a booking, because of that. And it's a great way to make extra money on your own schedule, and that gives that high touch that I talked about. So those are the kind of things that we've done, and we'll continue to do that. I mean, another first is that we integrated our gig economy travel agent with an Alexa app. So if you're, in your kitchen or in your living room and you say, Alexa, have HotelPlanner book me a hotel, it's going to connect you to a VIP gig economy travel agent reservationist in the city that you want to go to, that you can then have a conversation through your Alexa device. That's the kind of innovation we do at HotelPlanner. We're going to continue to do that because it's in our DNA. I mean, like I said, the two co-founders, one's got a background in hospitality and the other one in technology. You put those together and you get high touch with the high automation and exciting products come out of that.
That's really exciting. I mean, talk about just being in your kitchen and thinking of, wanting to go somewhere, and you just speak it into the air and speak it into existence, really.
Right. And then Alexa asks you a few questions and then connects you with a local expert. It's just so perfect. I mean, some of the most perfect ideas are very simplistic like that too. You just have to think like, what would I want? I mean, what other companies had done before is they tried to make the whole process completely through the Alexa robot. But you can't do that because nobody wants to put down 1,000 or more down on a vacation without talking to, a local expert first. If you're not going to be searching online and reading all of that information yourself. So this kind of bridges the two worlds, to give you what Alexa does well, but what a human being does well. Yep.
Yeah, it seems like those the service touch points are well kind of categorized and come in at the most relevant points. So that's a great point. Can you take us through a few of, before we get to the growth strategy, can you take us through a few of the most relevant valuation metrics and perhaps ratios?
Sure. So, like I said, we didn't go with the highest valuation, which is one of the reasons that our stock, is done very well since the announcement was made. Our valuation is only a 3.3x of our revenues. So, that's very low compared to the median, which is at 5x for our industry. We did that on purpose because we wanted to give ourselves plenty of room to grow into, a big valuation. And, our multiple of EBITDA to our valuations and pre-money is very reasonable too. We're at 25x of EBITDA on our 2022 numbers, on our forecast for EBITDA of 2022, 25x of EBITDA to our valuation, our pre-money valuation. So that's a great metric as well. So we're both profitable at a reasonable multiple of EBITDA as well as a multiple of revenues.
That's great. Let's talk about some of your recent partnerships and how they came to be. I understand there's some with professional basketball and other sports.
Sure. Being in the group event space, partnering up with sports teams is a no-brainer for us. One of the things we specialize is giving fans travel special rates. We call these closed user group rates. So, partnering up with pro and college sports teams, and then giving their fans access to our special discounted rates, our closed user group rates, is what we build, specialized portals for. And that makes up 18% of our revenues are these closed user group rate portals. For instance, we did one over the Pride parades in New York back in November, and you can see that the site's still up. It's pride.hotelplanner.com. And so, partner up with Orlando Magic. We'll launch a similar subsite to that, orlandomagic.hotelplanner.com. And then we'll be able to customize the results specifically for their fans' travel needs. And that, again, going high automation, high touch. We want to give each person a little bit extra on our service that you may not get with the other guys.
That's a really neat concept of catering to even certain sports fans groups and almost, inevitably fostering a sense of camaraderie if they're all kind of going to be booking similar accommodations and things like that. That's a really neat way to assimilate or aggregate, I guess. You have a certain partnership with Extended Stay America. We've all seen this pandemic trend of workcations, working remotely, working from anywhere. What's kind of the market opportunity for stays like this moving forward?
It's big. I mean, we've always been big in the extended stay market. It goes with the groups. We would have work crews that would go and have to work on a project for months. So if you think about it in the groups travel industry, you're not just talking about weddings and sports teams that are only there for a few days. You have these work crews that can be on a project for 3-4 months or longer, and that's where extended stay properties are vital for that. So of course we have those deals for individuals as well whenever they want to book a really good extended stay rate.
Yes. So then how will all these partnerships and perhaps additional partnerships advance your strategic priorities, would you say?
Well, our strategic priorities for 2022 are we're going to launch a loyalty program, and that's going to give groups and individuals VIP service and access to special discounted rates for a small monthly fee. We're also going to expand our gig economy agents from 3,000 to 10,000 agents. And then we're going to expand our offering to our hotel suppliers for different, different ways that they can portray their hotel under different metrics, and they will be able to essentially get more business from us. So those are the 3 initiatives that we're working on for 2022, and all 3 of those will significantly, move the needle. But as far as our forecast goes, just hitting our forecast most of that's baked into just the synergies of the merger between us and reservations.com. We have 50,000 direct hotel relationships. Reservations.com doesn't currently have direct hotel relationships. So when we plug in our direct hotel relationships, and that increases their margin, a lot of that revenue growth is baked into those numbers just from that merger.
And, with everyone's kind of forecasts for 2022 and beyond, of course, the COVID pandemic plays into those numbers. Can you first tell us about how HotelPlanner was able to weather the very height of the lockdowns? I understand there was a very, very resilient kind of adjustments and pivots that were made.
Yes. So what we noticed was that there was still travel over the pandemic. It's just you had to find it. And luckily we have AI in everything we do, as I mentioned in the front end, on the SEM, search engine marketing side. Our AI is very robust. And that went out and helped us target people who were still traveling. And then from there, we found out, these people were doing research online, but they wanted to pick up the phone and talk to somebody to get local information because the internet wasn't always updated with what was going on. And hence the birth of the gig economy travel agent reservation platform, which has been huge. So we were only down in revenues by 23% in 2020 compared to 2019, which our competitors were down by over 50%. We attribute that a lot to the gig economy travel agent platform. Now that we've built it out more, in Q3, our Q3 numbers are released. We exceeded our forecasted revenues for Q3. We exceeded our forecasted revenues, and that was over Delta. And the reason we did that was because of the gig economy travel agent platform. So whenever there's a time of uncertainty, people want to pick up the phone and talk to somebody, and you can't talk to better people than our people.
And, you just mentioned the Delta variant, now we have the Omicron variant, untold amounts of variants that will continue to pop up down the road. To what extent are you monitoring, taking into consideration Omicron, and how will you react to it?
We're monitoring it. I know, as I just mentioned, flew from Singapore all the way to Miami, how tough it is to travel over these days. And so having, a trusted travel service with high customer service is essential right now, and that's what we have. So, we're weathering the variant very, very well, and we will continue, to do so because now we have experience doing it. The hardest days were February and March of 2020, when you're like, hey, what's this? I've been through a lot with this company, but I've never done a pandemic. And now we have, and so now we know what people want over a pandemic for their travel needs, and we can give it to them, so it doesn't bother me.
Yeah, I feel optimistic as well, cautiously optimistic. And you had mentioned some variables a little bit earlier, but has travel indeed returned to its 2019 peak yet, or what is the forecast for when it will?
Forecasting for leisure travel, it is returned recently and is supposed to continue and exceed in 2022. Business travel is still down from its 2019 levels, I believe by about 23-25%. And they're not estimating that business travel will return fully until 2023. So, leisure is where our specialty is, and we've been seeing great growth. I mean, like I said, in Miami, there was just South Beach hotels were going for over $1,000 a night. So average daily rate is growing rapidly. So the revenues are quickly returning to the industry. Hoteliers that I speak to on a daily basis are sharing really great numbers. So they're excited right now.
Yeah, that's great. And business travel has long been the bread and butter of the hotel industry. So, with these new kinds of hotel stays, can you kind of talk about the long-term market opportunity for HotelPlanner, maybe some things that we haven't covered?
Well, as I was mentioning before, we're going to continue to innovate. We're going to build out our engineering department with all new, more talent, and that's going to give us the ability to build products faster. We're going to look into, packaging more, especially around events. We're going to look at VR around events. We're going to start looking into a lot of different places, and some will acquire and some will build in-house. But, if it's an event, an individual travel needed, and it fits into a niche of high touch and high automation of a space that we can really innovate, we don't really want to do what somebody's already done already. We've always taken pride of being on the forefront of everything we do. I think that's where we get an amazing reputation in the industry. And this is why, we have big partners like Expedia and like Booking.com that use some of our products, or, bestwestern.com. We power their 9+ hotel rooms on their site. They come to us because they know we innovate, and we innovate quickly and give customers really what they want. And because we have the scale, we do more groups than anybody in the world. 5,000 groups will go through our system during high season. And so that gives us the kind of scale where we can test things out, and that's never really existed before in our space. So A/B testing is vital to make sure you're really putting the best product out there. And with our volume in the group space, we can A/B test, and so that's another reason why people look to us for innovation. So we're going to continue to go down there because we have, a history of doing it. We know how to do it and do it profitably. So that's what we're going to continue to do.
Yeah, talking about staying kind of nimble to new travel trends, any other kind of, I would say verticals or kind of new strategies that you can talk about specifically, to the extent that you can. We don't want to get anyone in trouble here.
New verticals. As I mentioned, VR, virtual reality and events would definitely be a new vertical for us. One of the verticals we are currently touching, but and we made 2 acquisitions in before COVID hit, was venue search, offsite. I should call it offsite venue search. We acquired Venue Explorer in Singapore and Event Connect in Australia. and it got a little bit derailed by COVID, but we plan to put that back in action again. We own meetings.com, and meetings.com specializes in corporate bookings for small and large events for venues both at hotels and offsite. And so acquiring these companies increases the product that we have offering on meetings.com. So we're going to continue to start growing that out again too.
Yeah, that's great. Let's talk about a bit about your management board and what kind of strengths they bring. You're a graduate of the Cornell Hotel Management Program. You had mentioned that earlier that there was an interesting individual that is on your board there. And can you just talk about a bit about what strengths that round out the profile of HotelPlanner?
Sure. So when we wanted to put a board together, we wanted to put the most diverse board we possibly could with the most unique experiences possible, so that whenever we were tackling any easy or tough questions, we would get a very robust, diverse set of opinions. And I think we successfully did that. We started with Dylan Radigan. He, might know him from CNBC, Bloomberg, and then his own show on MSNBC. Great experience in the media space. And so he gives us that view set. It's specifically the financial media. Then we have Gianno Caldwell, who is our youngest board member. African-American, grew up poor on the south side of Chicago, totally self-made. He's an author, and he's a political analyst. And so he gives us insight in what's going on in DC, and that's very important for a board to know what's going on in politics. And then we have Kate Walsh, who's the current dean of the Cornell Hotel School, and she lets us know what's going on with the younger generation. And I graduated over 20 years ago, so I don't know what's going on in the younger generation, but she's got a good feeling for that, and she's also got a great eye, for up and coming talent. So very essential to have Kate Walsh and the experience that she brings to the table. And then we have Mosa Mazami, who is the chairman of Astrea, and he's come on to our board, and he was an executive with Cisco Systems for 15 years. He's based out of Silicon Valley and very knowledgeable about all things tech. So it's great to have his experience and his insight on that side. Then we have Jeff Goldstein, who did M&A for Interactive Corp. Now he's has his own SPAC. He's also out of California and very connected in the finance and tech space. We have Jim Wilkinson, who is the Chief Communications Officer at PepsiCo and at Alibaba. So he brings corporate communications experience. He was also the assistant to the Secretary of the Treasury under Hank Paulson. So he has government experience as well. And last but definitely not least, we have Dieter Huckenstein. And he's a former CEO of Hilton for 15 years. So we, of course, would not have a complete board if we didn't have somebody who has great experience on the supply side and knows hospitality is better than I do, I should say. So that's our board, and we worked really hard to put the greatest board together we possibly could. And I'm biased, but I would like to think it's the greatest board of all time.
I mean, it sounds like an incredible a group of individuals really giving a wide perspective of insight and valuable insight on the industry. So congratulations for that. Well, I'm going to turn it back over to my colleague Jarrett, who will be heading up our Q&A portion of this session. So please, to the audience, please submit your questions for Tim, and we will look to get to those.
Thanks, Alexandra. Yes, we love the questions. Please keep them coming. Okay, Tim, let's talk a little bit about your international footprint. Of course, you're based out of Singapore, but tell us a little bit about how that benefits the company, first of all, to be based in Singapore. And then let's talk about international travel and how you sort of do that, global yet local service.
Yeah, so in everything we do, we like to have a global approach to it, and we like to have a localized service. So that goes with our executives too. So we spread our executives out. We have offices in London. We also have offices in Amsterdam. In London, our managing director is Tim Gunstone. He was the founder of i4Travel. In EMEA in Amsterdam, we have our president and CEO of meetings.com, which is Baz Lemons. He was a co-founder of booking.com. And then, of course, I'm here in Singapore. I won't be here forever. My plan is to move back to the West in the next few months. I was out here because we were not only looking, as I mentioned before, to go public on the Australian Stock Exchange, but we were also going to we acquired a couple of companies out here. We really wanted to grow Asia. And I think even through COVID, we've done that. We've gotten some remarkably big partnerships out here in Asia from the time I've been here. And now I am going to turn it over to our managing director of Singapore, Chris Lee, who's an amazing entrepreneur. He was the founder of Venue Explorer. So he's going to make a great MD of Singapore. And then, of course, in our headquarters, which is in West Palm Beach, Florida, we have our COO, Bruce Rosenberg, who was the executive vice president of Hilton Corp for e-commerce for 15 years. So he, knows the Americas very, very well and does a great job handling all the operations in that area. And of course, my co-founder, John Prince, who's our CIO, is based out of headquarters there with our CFO, Joe Groglio, who took Hertz public. He was the CFO of Hertz before he came to work for us. So we've spread our executives out. Our executives all have a extreme amount of experience, and they're mainly entrepreneurs too. So they're very independent, and I can travel as I need, and I can depend on them to get the job done without any micromanagement. So that's how we built the company, and that's why we get more done globally than a lot of companies that have much more employees than we do. But what's beautiful about what we do is that we have over 1 million RPE, revenue per employee. And that part of that is having really talented executives so that we don't need a lot of mid-management out there.
Great. Yes, no, you mentioned a little bit of M&A. Is there potential for more of that, or is it going to be organic from here on out?
Love M&A. We have an M&A department. Joe Blakely out of headquarters, who's originally actually from London, helps with that department. He has been scouting quite a number of great companies for us. We've acquired 7 companies in the last few years, and our plan is to continue to do that and more, because with being publicly traded, we'll have access to a lot more capital and a lot more creative ways to structure deals to get more deals done. So, yep, more M&A is on the horizon.
Okay. Now, we talked a little bit earlier about how there's no sort of direct comp, but can you talk a little bit about some that may fit that bill in a certain way and how you differentiate yourselves from them?
So we're in an industry of co-opetition and frenemies, as people like to say it. So we partner with all the major travel tech players, and they send us business, we send them business, and back and forth. So any way that we can make a travel more affordable and a better experience for the customer. The nice thing about our industry is we will, innovate in that direction, because we look after the customer first, and we're all data-driven companies. So we let ego get out of it, and so it's not like we're gonna pound a desk and say we don't do that because we're HotelPlanner and those are the baddies. We look at it like, hey, is this going to be good for our customer? Are they going to like it? Okay, this is great, and that's why it's been great to be in this industry, from the very beginning and grow with it. One of the companies that we spoke about that's in our space on the group side that's currently going public with a SPAC too is Cvent. We overlap in the group hotel booking part of the business. They specialize more on the corporate side. We're more on the leisure group side. But yeah, we're competitive with them in that space.
Okay, and why don't some of the big travel players like Expedia or Priceline attempt to offer the same services you do?
Over time there has been attempts to do that, but like I said, what we do is very, specialized, and we're very good at it, and that's why we look for spaces in the industry that require that high touch with high automation, complex problems that we can solve. And so, they've looked at the space and they've tried, different products, but our products that we put out are really good, and so they. That's all I can say. I don't know. I'm not.
That's great.
But I can tell you,
great.
It has been tried.
Right. So I've got another question here. How do you build up brand recognition for direct bookings? Have you naturally cultivated strong SEO and SEM?
Yes, we have cultivated over a decade of very strong SEO, because we have 50,000 direct hotel relationships, and each one of those hotels loads up information about their meeting space and banquet space. And we ask them questions that are applicable to a group booking, which is very detailed, and the different group types need different information. So we've built out, hotel profile pages that are very unique. And then of course that gives us a nice edge in the SEO market, the search engine optimization market. On the SEM side, then we've got a great system behind that, backed by AI, gets us a very good return on our investment. For every dollar we spend, we get $1.40 back. So SEM, SEO is a strong part of our business.
Does that mean that you don't have to necessarily run ads to rank high in a Google search?
On the SEO side, yes, we can get a lot of organic traffic from a high search engine placement that's not paid for.
Great. Let's talk a little bit about the tech, specifically AI. How is it, how do you use it? How is it addressing pain points for customers? Talk a little bit about the technology involved here.
Which side of the tech specifically do you want me to touch on?
So how do you use AI to solve pain points for customers?
Gotcha. Okay. I mean, the main part of the AI is customizing the hotel search results to the customer. Mm-hmm. And but part of that AI is knowing, having the front end of the marketing side tied into that same AI, so it speaks, to all sides of the business. And then, of course, if that same customer wants to pick up the phone, the AI is helping over a VoIP system, a voice over IP system, to connect with the right localized agent. So it's a full process from start to finish, to make sure that AI is customized, so that people, when they're calling up, they're not getting asked a bunch of questions and having to tread over old ground that they've already gone through on the online system. So it's all integrated, and it makes those pain points go away there.
And how has COVID accelerated this adoption of AI in the travel industry?
Significantly, I believe. COVID has accelerated the winners. So, the traffic that we're seeing as one of the companies that has pivoted successfully and separated ourselves out. And then if you go to our deck, there's actually a slide that shows that. It's a line chart, little dotted line, and then it shows our growth that we've done over the last 2 years compared to our competitive set, and then our growth that's forecasted compared to their forecasted. When you see that slide, you'll see that we're definitely separating ourselves out. That's going to give us a ton more volume of people searching us out. So we've got to maintain our same level of customer service and the same great deals that make people search for us and come to us, and we have to do that at volume. So AI is essential for helping us do that and staying, competitive and staying on top.
That's great. And I would definitely encourage everyone to check out that investor deck on the HotelPlanner website. Here's another one.
It's in the investor relations section, by the way.
That's
so if you go to the homepage,
all the way
and
to the
scroll
bottom.
down the bottom. Yeah. A lot of people miss those bottom links, but they're really important. But it's funny, we bury them. They're not that important. I guess it's not as important as actually making transactions that's on the top. But yep, keep going.
Yeah. So here's another question. Do you really get live people on the phone fast to help? It seems like it's cost prohibitive, which is why we struggle to get real help when booking hotels on third-party websites.
That's our uniqueness to the market. Whoever asked that question, hit the nail on the head, basically. The gig economy platform, which is the first of its kind, allows you to do that because you've got somebody there who's sitting in their living room who wants to talk to you about their city and why they're a great city to come to and tell you all the cool, aspects of it. And that's why we get the connection super fast.
Okay. Here's another one. Are travel agencies as we used to know them going away completely?
We'll see what happens out of COVID. You see, as you probably know, the travel industry really boomed in the 70s and the 80s. The airlines structured GDSs, global distribution systems, around ticketing through agencies so that they would have a local presence without having to put an actual store on every corner, right? And so it was very easy to make money in the travel industry as a traditional travel agent in those decades, because if you wanted to buy a ticket, you basically had to go to that brick and mortar store, and the airlines and the hotels were very supportive of that. Now, obviously, with the internet, these suppliers, airlines or be it hotels, can all sell direct, so they don't need your presence on the high street anymore. And so that's what makes it tough. Luckily, these travel agents, the owners are very resilient. They're battle tested because they've been around for a long time, but they're, the owners are in their 60s and 70s now. So it's going to be interesting to see what happens after COVID, of how many that may have, closed shop over COVID don't, take it as a step just to head into retirement. So I think it's going to be tough for the traditional travel agent, and then of course the bread and butter too of the traditional travel agent was the corporate traveler as well, because corporate travelers had a lot more rules associated with it and they needed more high touch. But with corporate travel being as depressed as it has been over COVID and taking longer to recover, that's also going to take a big chunk out of the traditional travel agent, agencies. So yeah, we're going to see how they recover. But I'm going to say it's never going to be close to the highs that it had a few years ago, just because the majority of owners are getting very close to retirement age.
Right. Okay. Can you make sure customers are happy when there are multiple layers between them and the hotel? If there are changes or issues, can you help maintain customer satisfaction?
I mean, absolutely. That's our core business, so high touch with high automation means that we're not only going to give you the best service, but we want to give it to you at the best price. So that's what we want to do, help you find that great value and then help you with any issues you might have. And we're an advocate for the customer first, because, we get paid when we make a transaction. It's very different than, buying direct, and your only advocate would be the advertiser that got you to that direct, which would maybe be a Google, and you're not going to call Google up if you have a problem, but you can call us up, and our people who have relationships with the hotels will advocate for you. And so that's makes us, valuable in the market. And so it's like how I would like to handle it. This is why you go through a stockbroker or an insurance broker. If the insurance company doesn't want to pay up, you would hope that your broker goes to bat for you.
Right. Okay. Let's see. can you talk about your operating leverage? As you grow, will you need to pay a lot more gig workers, or can margins expand easily?
Margins stay the same no matter how many gig economy employees we have. Our gig economy employees get paid a percentage of what is made on each reservation that they complete. So, you know, whether we have 3,000 or 10,000 gig economy agents, that doesn't change our cost structure, because they're only going to get paid for actualized reservations. So yes, it does scale nicely.
Okay, and let's see. I realize there's no perfect comp. We talked about that, but are there some listed companies that investors should look at when considering valuation?
Oh yes, I mean, anybody in travel tech.
You're...
I mean, in our deck, we list a bunch of them off, especially towards the end of the deck. There's actually a slide that will show you our EBITDA and revenue growth this year and next year compared to the highs of 2019, and a percentage, and then base that next to all our comps there. But the comps are like Webjet, Make My Trip, Trip.com, Booking, Expedia, Trivago, and there's probably more, but those are the ones I can name off my head.
Great. Well, we're almost out of time here, but I want to thank Tim for being here with us today. Tim, I'm going to give you the last word. Thank you to the audience and those who asked questions. Again, the replay will be up in about an hour on IPO-Edge.com. Thank you to Alexandra Lane, my colleague, and of course, the man behind the scenes, John Janarone, my colleague as well. And Tim, I'll give you the final word.
Well, I just want to say happy holidays and thank you for having me. And you know, I really appreciate what you guys do. It's great to have, you know, independent media out there that's you know, looking at the space differently. We have so much in common because of that. And your enthusiasm for the media industry is just like our enthusiasm for the hospitality and travel tech industry. And it shows how well we can innovate, because this has been one of the best interviews I think I've ever done. You know, it's been very comfortable, and you guys asked really great questions, and you know, just thank you. That's all I have to say.
Okay, we'll
Great
leave
to
it
have
with
you,
that.
Tim.
Yeah,
Thanks, everyone. We'll see you next time.